Hello and welcome back to the Rekt Capital channel. Welcome to today's video. I hope you're having an amazing day. Let's dive into today's video about the top 6 investing strategies in a crypto bull market. Number 1 is to buy the fear and sell the greed. One of the best investors to ever grace this planet Earth, John Templeton, said to buy when others are despondently selling and sell when others are avidly buying requires the greatest fortitude and pays the greatest reward. And I'm going to tie in this quote with another investor who's pretty amazing himself, Warren Buffett. Be greedy when people are fearful and fearful when people are greedy. That's essentially going against the grain of psychology in the market, because whenever we see buy action and we see all this buy action go to the upside, we're seeing price move up as green candles build, many people are FOMOing. They fear that they're going to miss out on the uptrend, so this fear of missing out, one person's FOMO builds on another person's FOMO, and so on and so on. So we see these green candles go all the way to the upside, and this psychology just builds on itself. And this is the psychology that you have to avoid. It's the psychology that you cannot give in to and follow yourself, because essentially speaking, the majority is often wrong. So it's very important to want to buy on retraces, because not many people will want to buy on those retraces. People don't like buying the proverbial blood. But this is exactly the way to go about it. Buying the blood, the proverbial blood, buying when people aren't interested, buying when people are fearful, uncertain, hesitant about price, people thinking that Bitcoin is dead, that crypto's never going to recover. That's exactly the moment when you want to scale in. And Baron Rothschild is a very good example, because he made a fortune buying the blood, buying when people did not want anything to do with whatever investment he was focusing on. But the second part of this quote of buying when there's blood in the street isn't recited as often as it probably should. You should buy the blood in the streets even if the blood is your own. So it's very interesting, because we are often our own worst enemies in trading and investing, and we will always go against ourselves, which is why we'll probably have to go against our feelings and emotions towards Bitcoin's price falling, and try to really press past that, face our fear, and buy the fear, essentially buy everybody else's fear but our own fear as well. And that's the key to profitability. You have to go against yourself to become profitable. So that's a powerful investing strategy in theory, but I want to leave you with a practical example, or at least a practical thing that you can use in your investing. And this is the Crypto Fear and Greed Index. So this is an index that measures market sentiment in the crypto market. So whenever people are greedy, you'll see that the index is going to the upside, and whenever people are fearful, you'll see that the index is going to the downside. So in this illustration, I've essentially outlined when to be greedy when people are fearful in the green box, and when to be fearful when people are greedy. And of course, if we just look at this range right over here, then within this range we just see a lot of volatility. We see all this movement in the index, and of course, if you see that this index is on the lower end of average, so below 20 or so, this is when people are really fearful in the market, and this is where extreme fear precedes financial opportunity. And this is what I was talking about in one of my articles about the Fear and Greed Index, and how well it can predict Bitcoin reversals in price to the upside. So check that article out in the description down below. It's a very useful article just to show you that every time Bitcoin managed to revisit this green area where people are fearful, then we'd see reversals in price action to the upside. You know what, I'm just going to show you this article very briefly in this video, how to use the Fear and Greed Index to predict increases in Bitcoin's price action, essentially speaking. So this is the gauge, the visual gauge that essentially shows us a visual representation of the data in the Fear and Greed Index. And this is essentially the data right here. And right over here in the article, in this illustration, I just show how extreme fear territory tends to precede financial opportunities. So every time we saw an extremely fearful point in the Fear and Greed Index, 1, 2, 3, and 4, and 5, and so on, we'd see Bitcoin reversals towards the upside. So Let me just show you this on Bitcoin's price action over here. Every time we'd see 1, 2, 3, 4, 5, we'd see 1, 2, 3, 4, 5 in Bitcoin's price action. So every time we've seen extreme fear delve deep and creep into the minds of investors, we'd see movement in Bitcoin's price action towards the upside. So this is a very good predictor of reversals towards the upside in Bitcoin's price action. And here's a table essentially of all the reversals that I've covered in this article, and you see that sometimes it can be 100%, sometimes it can be only 8%, and sometimes it can be entire market cycles altogether. So very interesting to see. Check this article out if you'd like. It's in the description down below. Have a read. It's a very useful tool, the Fear and Greed Index, just to predict potential reversals in Bitcoin's price action, because after all, extreme fear precedes financial opportunity and extreme greed precedes a sell-off. And this ties in with one of my rules as to why investors should never FOMO. And this is actually a thing that I included in my video as to what I wish I knew when I first invested in Bitcoin. Check out that video in the top right hand corner. Essentially speaking, don't ever FOMO, because everybody FOMOs into green candles. Like I was talking about earlier in the video, this psychology tends to build on itself, and people are FOMOing. This person is FOMOing a bit, then this person is feeling a little bit more FOMO than this person. So they build on each other. This psychology builds on itself, and it becomes this sort of herd mentality where everybody is just doing the same thing, and that is absolutely the wrong thing to be doing if you're an investor and trader. You want to go against the trend before it even develops rather than joining a trend, because that trend could be on the horizon of potentially ending. So it's very important to stop FOMOing on green days and actually start FOMOing on red days. And if you do that, if you FOMO in when there is no trend has emerged, or a bearish trend is ending, then you will be on the beginning. You'll be enjoying the beginning of a new trend altogether and being profitable. So don't FOMO on green days, FOMO on red days, and your portfolio will look drastically different if you do so. Here's my second top investing strategy for a crypto bull market. Don't go all in. Invest only what you're willing to lose. And the thing here, guys, really is that you have to think about your finances and your emotions as two separate things. So the more money you invest into crypto, the more emotional you'll be towards that investment. And vice versa. If you just play around with a little bit of money that you're okay with losing and you just invest that into Bitcoin and crypto, then you're okay with what happens in the crypto market, because we tend to see these sort of days, guys. We tend to see lots of volatility. We see green candles towards the upside and red candles towards the downside. That sort of volatility is conducive to making a profitable living from the crypto markets, but at the same time, it can cause a lot of emotional distress. So if you're investing in crypto, please don't go all in, because you're not only going all in financially, you're going all in with your emotions, your attention, because of course, if you're highly emotional towards your crypto investment, you're also going to expend a lot of mental resources on that emotional investment. So you'll constantly check up on it. You're going to waste time and mental energy just checking up on it, looking at the charts, seeing if something will change, seeing if there's a movement to the upside, a little movement to the downside. That's just not the way to go about it, because if you're emotional, you start to focus rather on the entire macro perspective. You start to focus extremely close. You miss the forest for the trees. You only focus on these little fluctuations, short-term fluctuations in price. So this sort of tunnel vision develops, and you lose sight of what's really potentially going on, and that's the fact that there is a crypto bull market, and whatever retraces we see are merely dips in an otherwise strong and healthy uptrend in a new bull market. So don't go all in to Bitcoin or into altcoins, because you're going to go all in emotionally. And if you're emotionally attached to an investment, you're going to make emotional decisions and you're going to lose sight of the bigger picture, which only ties in with my next investing strategy for a crypto bull market, and that's to keep the long-term perspective in mind. Keep the macro view. Zoom out rather than zooming in. Zoom out so you understand what's going on in the bigger picture, in the grander scheme of things, because whenever we see a retrace in a bull market, like here for instance, if we see a retrace over here, that's a dip. That's a very good financial opportunity before we see further trend continuation towards the upside and new all-time highs. So it's so important to understand these Bitcoin market cycles. Essentially, Bitcoin cycling up in an uptrend, a new bull market, and cycling down in a new bear market. Cycling from fear all the way to greed, and then from greed all the way to fear once again. So it's so important to understand these Bitcoin market cycles, and I talk about these in my video about what I wish I knew when I first invested into crypto and Bitcoin, because understanding these Bitcoin market cycles is so important. Understanding that market psychology is super valuable, because it will give you a perspective that not many investors have, because they look too emotionally at the charts and they react too emotionally to short-term movements in price. So if you're looking at a chart on a weekly time frame, and of course I know this is the daily time frame, but let's imagine this is a weekly time frame for a second. If we're looking at the price action on a weekly time frame, then we shouldn't have daily time frame or even hourly time frame or even 4-hourly time frame emotions. We shouldn't have these lower time frame emotions if we're looking at the chart on a higher time frame. So if you're investing, don't fall for your lower time frame emotions if you're looking at crypto on a broader, higher time frame. Keep that perspective in mind. Zoom out on your chart and on the price action, but also zoom out on your emotions. And of course, if you'd like to learn a bit more about Bitcoin market cycles, check out the video in the top right hand corner about why we are in the crypto bull market. That video is an excellent resource to just give you an idea as to where we are in the Bitcoin market cycle, and to understand that we are currently in a bull market, and that involves different investing and trading strategies which you can use to your advantage, hence this video. So let's look at some more investing strategies that can help you navigate a crypto bull market effectively. My fourth investing strategy is to HODL, because I was talking about this in the other video as to things that I wish I knew when I first invested in Bitcoin. HODLing isn't a good idea when we're seeing a bear trend, right? Whenever we're seeing an extended bear trend, a bear market in Bitcoin's price action, HODLing is a terrible investment. But in a bull market like this one, or even this one, it's such a good idea to just HODL, because most traders are going to lose money if they trade the market, because just like we were talking about, guys, people are very emotional about short-term fluctuations, and traders actually engage in these short-term fluctuation. They actually buy and sell on lower time frames, so naturally speaking, they're going to be more zoomed in, not only on the price but also on the emotions, the emotions that this price evokes in these traders. Hence 90 to 95% of traders lose money. And the thing is, for most investors in the Bitcoin and crypto markets, the best strategy, the best investing strategy in a bull market is to simply HODL, to simply hold on for dear life. Because if you have a long-term time horizon, if you have a time horizon where you're zooming out, you're keeping that macro perspective in mind, it's so important to just HODL, hold on for dear life, as the meme goes, past these dips, to pass all these volatility spikes and downward wicks and whatnot, just to hold through all this movement and not get emotional about it, because you have a long-term perspective in mind and that you want to sell at 19,000, 20,000, whatever the price target might be. That's something that you have to bear in mind, which ties in directly with my next investing strategy in the crypto bull market, dollar cost averaging. And I'm just going to zoom in here just to give you an idea as to what I'm talking about. Let's assume that this is where we want to buy, right? This green area. And let's assume that this region, this price has gone to the upside, and now we're seeing a dip, and we're actually in this dip right now. So what we're going to do is we're going to dollar cost average into Bitcoin. So this first black bar is going to say, all right, I'm going to buy Bitcoin. Let's say I'm going to dedicate $1,000 to buying Bitcoin. So 20% of those $1,000 I'm going to dedicate to buying Bitcoin at this price level while we're seeing this retrace, because in a bull market, buying the dip is actually a good financial opportunity. So I'm going to do that. I'm going to ladder my buys, my buy orders. And essentially speaking, whenever you're laddering your buy orders, you're doing this. You're essentially creating a ladder. These are essentially the rungs of the ladder. Each step of the ladder is right over here, and each rung of this ladder, each step of this ladder constitutes an amount of money that you'd like to dedicate to that particular buy order. So you might want to buy at this level and dedicate 20% of your $1,000 to buying Bitcoin at this level. And then if Bitcoin goes a little bit lower, you'd like to increase that percentage of your portfolio which you'd like to dedicate to buying Bitcoin at this particular price point, because if Bitcoin is falling, then you're averaging into Bitcoin, right? So you've averaged in with a 20% buy order right over here, but you're increasing this amount to 25% because you want to have Bitcoin at a cheaper price. You want to have more Bitcoin at a cheaper price. So as you average into Bitcoin with stronger and stronger buy orders, increasing from 20 to 25 to 35%, you're getting cheaper Bitcoin. Not only are you getting cheaper Bitcoin, but you're getting more of that cheaper Bitcoin. Do you see what I mean with these percentages? That as price goes down, you're going to average in more and more so as to get Bitcoin at a cheaper price, but also to get more of that Bitcoin at a cheaper price. And of course, if you're very fearful at around this level, then that last 20% ladder buy order could be in there just to average that Bitcoin position a little bit lower, just to have that overall average price as cheap as possible, as low as possible. So dollar cost averaging is such a unique and really good investing strategy in a bull market, because remember, in a bull market, any retrace and any dip is a good financial opportunity. So whenever we see one of those retraces, laddering our buy orders like so at certain price points and just having these percentages a little bit more weighted as price goes down is a good investing strategy. So even if you buy Bitcoin a little bit higher and you fill 20% of your $1,000 at this price point, you're still going to average down your investment by going a little bit harder here with 25%, and then a little bit harder here as well, 35%, and so on. So overall, your average price will be quite decent as long as you've got these laddered buy orders. Because if you were to just buy 100% of your $1,000, you were going to go $1,000 right over here, then of course you'd probably miss out on this, right? You'd miss out on all these wicks, and you'd miss out on the opportunity to just get and accumulate that Bitcoin at a lower price. So that's my investing strategy for laddering your buy orders and buying the fear and laddering into that fear, because nobody wants to buy the fear, but of course everybody wants to buy the greed that follows afterwards. And the same essentially goes for laddering out and scaling out of your investment when we're in a new uptrend. So remember guys, we bought around here. Let's say for the purpose of this example, price has gone towards the upside, but we don't really know where to sell. It's very difficult to time a top in a market like crypto. Of course, you can use technical analysis, but sometimes if we're in a very strong uptrend and we're on the way to new all-time highs like we were in the previous bull market before Bitcoin hit $20,000, it's very difficult to try and time that top. So for a lot of investors, it's actually a good idea to just try and scale out every now and then, have that consistent profit taking strategy, and have one ladder at this price action, or at least price point right over here. You can sell 20% of your position here and then 25% of your position over here, and as price goes towards the upside, you're still in the position and you're actually exiting into an overall average price that's actually going to be quite decent. You're going to be selling 20% here and then 35% over here, or even just 15% and then 20% at a much higher level. It's all up to you as to how you'd like to ladder and scale out. Every plan is different, but this ties in with my next investing strategy: respect your plan. Have a plan and stick to your plan. Always stick to your plan, because trading and investing is an emotional game, and your plan is essentially an oak tree on a windy day. It's going to be firmly rooted and grounded, and it will serve as your anchor when times are very tough and emotional and volatile in the market. So if you have a plan like this, before we even want to sell, let's say that this uptrend hasn't even happened. We've only just bought around here. Let's ignore what's happened ever since then, and let's just focus on the fact that we've already bought the Bitcoin, we've managed to ladder in successfully, we've got our dollar cost average price at a pretty decent price, and we're just going to wait for this uptrend. But before this uptrend happens, we're going to already put in our buy orders, or at least our sell orders. We're already going to be prepared beforehand. This is going to be our logical plan. This plan is firmly rooted in logic and reason, so whenever we see price appreciate towards the upside, everybody's FOMOing, people on social media are getting excited and screaming that Bitcoin's going to go to new all-time highs and there's a new paradigm, and everybody's giving in to this herd mentality, and there's so much euphoria in the market. If you have a plan, you're sort of immune to these emotions, because granted, you're always going to get caught up in these emotions when everybody is emotional about price, and the media and the mainstream are all aware and talking about this, even in the bus or wherever you might be traveling to, whether by taxi, the tube, the subway, whatever the case may be, you might be hearing that people are talking about Bitcoin and thinking of buying. That's usually the time to be really cautious, because remember, be fearful when other people are greedy. So a plan like this, a logical plan, can guide you through the world of logic and reason, especially if you're feeling a little bit emotional as well. But as all traders know, especially you guys, if you know and you trade Bitcoin and cryptocurrency a little bit yourself, you'll know that we can sometimes have a very good plan, but when things get emotional, we'll ignore that plan and it will just go out the window. We know that does happen sometimes, but we have to trust ourselves. We have to trust and have confidence in our skills and in our strategies, just to know that we have our best interest in mind. This plan was logical. It was well-meaning, it had our best interests in mind, and we have to stay faithful to that interest, to that best interest, because this plan will help us navigate the volatile emotional markets that is crypto and Bitcoin. So it's always a good thing to stick to your plan, and more often than not, it will be totally worth it. And that's just about it for today's video. Thank you so much for watching. Click the like button if you liked this video. Subscribe for more videos like this in the future. I'm more than happy to be providing this content on a daily basis, so leave a like if you like the video. Of course, leave a comment if you have any investing strategies of your own that you'd like to share. I'd be more than happy to read your comments and respond to them, so please let me know. Feel free to subscribe for more videos in the future. I'm Rekt Capital. Thank you so much for watching today, and I'll speak to you in the next video. Speak soon.